Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investment. I'm your host, Lewis, and I'm excited to share today's stories with you. We're starting off with a couple of interesting developments in the market. First, let's talk about Bajaj Finance. The company is undergoing a significant change with its stock split and dividend payout. For those who may not be aware, Bajaj Finance has announced a 1-5 stock split, which means that each shareholder will receive 5 new shares for every 1 share they currently own. This move is expected to make the stock more accessible to a wider range of investors. Additionally, the company has declared an interim dividend of 400%, which is certainly good news for shareholders. On the other hand, we have Sandip Sabharwal sharing his insights on the current market trends. He believes that the recent rally in Paytm's stock price may have incorporated most of the positives, and therefore, it might not be the best time to buy into the stock. He also thinks that the entry of new players like Ultratech and Adani into the cables and wires segment could be disruptive, but not as much as it was in the paint sector. Furthermore, Sabharwal discusses the electric vehicle market, both globally and in India. With global EV sales facing challenges, such as price cuts in China and potential regulatory changes in the US, he suggests that it might be time to reset the premium valuations of EV companies. However, he remains positive about the long-term growth prospects of the EV sector, particularly for companies like M&M, which has a well-positioned portfolio across traditional ICE, EV launches, and farm equipment. Lastly, Sabharwal expresses his liking for Bajaj Auto due to its substantial correction in stock price, potential domestic market recovery, and exports doing well. He also sees an option value in their takeover of KTM. These are just a few of the stories we're following today on the Riskwiser Zone. We'll continue to monitor these developments and provide you with balanced analysis and insights to help you navigate the complex world of stocks and finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of economics and trade. Today, we're looking at a couple of stories that highlight the complexities of international trade negotiation. First, let's talk about Japan and its trade relations with the United States. Ryosai Akazawa, Japan's top trade negotiator, has expressed optimism that a trade deal between the two countries will spare Japan from higher auto tariffs. This comes as U.S. President Donald Trump considers increasing tariffs on imported cars to boost production in the United States. Akazawa's comments suggest that Japan is seeking special treatment in its trade negotiations with the U.S., and that a bilateral agreement could exclude Japan from rules that apply to other countries. This is an interesting development, given the current state of global trade tensions. Meanwhile, in another part of the world, the Bank of Japan has indicated that it sees inflation running slightly stronger than expected earlier in the year. This could potentially pave the way for discussions about raising interest rates if global trade tensions subside. The bank's officials are said to be monitoring developments in tariff talks globally and their economic implications. These two stories highlight the delicate balance of international trade negotiations and the potential risks and opportunities that arise from them. As we navigate this complex landscape, it's essential to stay informed and consider multiple perspectives. The ongoing trade tensions between major economies like the US, Japan, and others serve as a reminder of the interconnectedness of global markets and the need for cooperation to achieve mutually beneficial outcomes. As we continue to monitor these developments, it's crucial to approach the topic with a nuanced understanding of the various factors at play. We'll be keeping a close eye on how these stories unfold and providing you with updates and analysis as more information becomes available. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's episode, I'd like to shift our focus to some recent news in the investment world. Sprott Asset Management, a subsidiary of Sprott, has announced an update regarding its precious metals and critical materials investments. Specifically, they've made public their intentions to sell units of a trust through an at-the-market offering program. Now, for those who may not be familiar with this kind of program, it essentially allows the issuer to sell securities at prevailing market prices over a certain period of time. The proceeds from these sales are intended to be used for various purposes, including funding operations and potentially investing in more assets. It's worth noting that Sprott Asset Management specializes in precious metals and critical materials investments, positioning themselves as leaders in this niche. Their expertise includes managing exchange-listed products, equities, and private strategies, catering to a wide range of investor needs. However, like any investment opportunity, there are risks involved. The value of the trust can fluctuate based on market conditions, and past performance is not a guarantee of future results. Investors should always conduct thorough research and consider their own financial goals and risk tolerance before making any decision. The announcement also highlights the importance of understanding forward-looking statements in investment documents. These statements can provide insight into a company's plans and expectations, but are inherently subject to uncertainties and contingencies. It's crucial for investors to recognize these factors when evaluating potential investments. In conclusion, Sprott Asset Management's at-the-market offering program represents an opportunity for investors interested in the precious metals and critical materials sector. However, it's essential to approach this with a balanced perspective, acknowledging both the potential benefits and the associated risks. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.